In Investing 101 today, some investors may be taking a loss, or maybe there are some capital gains on mutual funds this year. Here with the end of the year mutual fund tax tips, Jim Uren, a financial planner at Phase 3 Advisory Services. Thanks for being here, Jim. Have mutual funds been a good place to invest in 2022?
Well, mutual funds can always be a good way to go, but of course the market's down, and so most mutual funds are down for the year. And normally, when things are down, you don't have to pay much in taxes, but there are some exceptions on mutual funds and exchange-traded funds that can require you to end up paying a capital gain, even though you may be down for the year.
What do people need to know, Jim?
Well, what you need to know is there's kind of two levels of taxation on a mutual fund or exchange-traded fund. I kind of call it your personal level and what I call behind the scenes. Behind the scenes is really what the mutual fund itself is buying and selling. If they happen to sell some positions in a year like this at a gain, you end up having to pay a portion of those capital gains. Those are distributed according to the IRS law to each shareholder. And so you have to pay a portion of that capital gain, even though you yourself may actually be down for the year in your mutual fund. So that can be a little frustrating. Fortunately, there are a few things that you can do to potentially minimize that.
What are some ways to minimize those capital gains issues?
The first thing you want to do, of course, you need to find out if that's the case. You can contact your mutual fund provider, call them, hop on their website. They'll be able to give you an estimate of what, if any, capital gain distributions there may be this year. Then you have really two approaches. If you're going to have some capital gains you got to pay, one option, you can actually sell that fund before the distribution. However, you need to be careful because you may still be triggering a tax at your personal level. If you've purchased that mutual fund and you're now selling it for an amount higher than you originally paid, you could be subjecting yourself to a capital gain on that level. Your other option, though, is usually preferred, something we like to call tax loss harvesting. You can really look at your other investment options. Again, these are taxable accounts, and see, is there anything that you might be able to sell, even temporarily, that might actually be at a loss. And so let's say you have a $1,000 distribution in capital gains from a mutual fund. Perhaps you could sell a stock that you have a $2,000 loss in. By doing that, you are now more than offsetting that capital gain, and you won't have to be subject to any capital gains taxes when you go and file your return the following year, which can be really helpful.
Thank you, Jim. We appreciate your time today.
Thank you, Angie. Always a pleasure. Have a good day.
Go to businessfirstam.com for where to see our show on TV.